Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and today I'm taking the opportunity to use the free video to look at Crude again. I've been spending a lot of time in the free videos looking at Crude, and why not? Because it's an active market, we're seeing a lot of movement, and there's a lot to learn from this chart. So a couple of the things that I wanted to point out as we got started. Because 9 times out of 10, I'm going to be using the continuous contract, or the crude oil futures. The continuous futures contract. This is a great place to look to have plenty of back data, and it's a very useful chart. You'll also notice that the voodoo lines show up here. But for what I wanted to talk about today, I'm actually going to flip over into the current front month contract for a couple of reasons. The first part of it is I know that the squeeze has fired short on crude on the daily, so this is a big, massive signal, and anytime I see something like that, I always like to come back and check my weekly. In this case, I don't have a squeeze on the weekly, so I'm primarily working with the daily chart. Knowing that I'm going to throw up this front month Q contract. And now what I'm going to look to do, I think this is a little easier if you will hide your studies, but we had a pretty sharp bounce today. Crude oil had a big rally back, and everyone wants to know, is this the spot where we can look to start shorting it? A couple of things that I think, the first of which is it's a little bit of a dangerous area, because anytime you have a market that sells off so hard, just remember that it could retrace 50% of that move and still be within a very bearish downtrend. So that's one of the first levels that I point out, and I think that's got some resistance well overhead, so I'd be patient with the idea. However, another thing you can drill down into that will help you from this, because we're in a very bearish market, so when will we get the chance to short it? Well, I like looking at rallies inside what has otherwise been a bearish trend and then comparing them to what we're working with now. So we can go back and run this. All we're looking for are similarities in how this has played out before and what we might see again. Just these first two already help illustrate my point, where you've got a certain point value that we've rallied inside this trend, and notice how those swings were so similar to each other. When those start to overlap and they have a little bit of a more decent confluence with your 50%, that's the area that I want to look to start shorting this. Now, if you drill down to this, and there was one other micro level of symmetry that held this morning right in there, but what I'll do is say, okay, not only am I thinking about the bigger retracement because we've had such a big sell-off, but if you hit this level of resistance, drill down into your 15-minute chart and run the opposing side of this to try and let yourself know when we're breaking down. So you zoom into it, you can see where resistance is held. Then I come into the 15-minute chart, which is great for your swing trading, and I do the exact same thing, except I'm going to run it in what would be favor of the bulls. You can see that from this previous, I always like looking at that decline that precedes the rally. That is typically a very good one to measure for symmetry, and it's a good heads up that when that breaks, then we're going to have better opportunities to the short side. So essentially it hit this morning and held. That's what kept me out of shorting it again, and that level is still holding as we head into the extended session. So tomorrow, if 52.42 is broken, then we can look to get back into the bigger daily trend to the downside with stops above this high. If instead we are above these levels, look for your bigger retracement zones, and that's when we can start this process over as we look to take crude into new lows. So I hope that helps, give you some food for thought in a very active market, and we will see you at the next free video. One other thing I want to make you guys aware of is the class that Bruce is going to be teaching next Thursday. This is July 16th. This is different than the Back to Basics course we are teaching. This is a paid course, but very affordable at $97. I would pay $97 just to hang out with Bruce for an hour. Now, of course, I've got a little bit of a bias, admittedly, but the information that he shares and the way he teaches is awesome. I think it's also very timely, because this is the first time, even for me, that I'm having to step back and say, the market is taking a shift for the worst. Knowing these types of strategies for drastic sell-off type environments, if nothing else, it is a good strategy to add to your trading arsenal. So I'm looking forward to it. I love learning from Bruce, and if this is something that you think you might add into your trading, that will be next Thursday, and you can find the link to that after this video. So you'll have a great night, and I hope to see you there.